Let's dive into the 8 important candlesticks. Before we do, let's have a little look at what a candlestick is. Now, a candlestick is just a reflection of price, the sentiment of the time frame that you're trading. Let's say a daily time frame. Now, a candlestick here, and there's all sorts of different ways to paint a price. You could use a line chart, you can use range bars, but we're going to look at candlesticks. Okay, so on the left hand side here, you've got a body, and then there's a wick that pops out the top and pops out the bottom most of the time. Now, the range of the day is the high of that wick. Okay, the low price of the day is the low of this wick. The body is made up always of the open and close price. Most default candlesticks are colored green. So if the open is down here and the close is up here, it closes green. Okay, and that body can be at any length within that wick. On the right hand side here, you've got, well, it's the body, okay, and the wick sticking out the top and the bottom here, the range of the day, or whatever time frame you're trading. And the body here is this great big long red. It's obviously open higher and closed lower. All right, so that's quite a bearish sentiment candlestick. All right, and then you got this little one here. So the range is important because it gives you the length of the candlestick, which indicates that there's either a lot of buying going on or a lot of selling going on. Let's take a little look now at these really important candlesticks, because you know, there's been books written about candlestick charts, and it's thousands of pages long or whatever, and it can be mind-boggling. If you stick to these ones, then you've got a good understanding. Now, on the left-hand side here is a standard line candlestick. Can be a positive or negative. What I've done here is I've just kept the body it's not filled in with green. Okay, so you know, for this presentation here, for this slide, it's just basically, it's an up candlestick. It means it closed up. It's green. Okay, now you can make sure you can have them filled in, the candlesticks, if you want to on your chart package, or you can make sure they're hollow with nothing filled in here if you wanted to. Green is enough for me, saying that it closed up on the day. This is just a normal candlestick. Okay, it means a continuation of an up move or an up trend maybe. When you get this within the move, the trend, that's fine. They're probably going to continue. All right. This one over here is a spinning top. You've got a wick that's very long at the high, above that's shooting out the top, and you've got a wick that's quite long shooting out from the bottom of the body. Remember, the body of the candlestick is this block here. It's red. So what does that mean, guys? If it's red, it means it closed lower. All right. So this is a bit like an indecision candlestick. You know, there's a bit of a battle going on. You always got to remember, what is the sentiment of that candlestick? Are the buyers in control or are the sellers in control? Well, when that body open and close is quite close to each other and it closes red, I would say that the sellers have taken control just, okay? Now, this one here is a shooting star, one of my favorites. When you see this candlestick at the top of a trend, so you see the price has gone up for quite a while, then you see a shooting star. This is a reversal candlestick. Get that stop tighter. Trail your stop tighter. The wick tells all here. It shoots up, okay? It shoots up, and then the sellers come in. Okay, they knock it lower, and it closes down at the lows here. Okay, so opened higher here, or opened here, may have shot up, which it did, then it closed right at the lows. It's likely to reverse. You see that at the top of the trend, get a stop or take some profits. Doji candlestick here, you can see that there is no wick sticking out the top. I mean, the open and close are at the same price virtually. All right, so a lot of indecision. What is the sentiment of that? Well, indecision, because it opened and closed. Nobody took control of that day or that 5-minute chart or that 1-minute chart or that monthly time frame. It doesn't matter. So that is indecision. Nobody taking control. Sentiment is either way. Okay, this one is the hammer. Hammers, people get this wrong a lot. Hammers are at the bottom of trends. Okay, inverted hammers in the middle of trends, and all sorts of other types that are not really important so much for this slide and presentation. But the hammer is at the low. Okay, so you got a downtrend. You see that the market opened here. It went all the way down in price, and then it closed above the open. It turned green, which means it closed higher than the open, and it was a hammer. It looks like a hammer. It looks like a hammer image pattern here. So if it's at the bottom of a trend, markets are likely to kick back and go back up. Bozu candlestick, strange type of name for a candlestick, and Marabozu and the Bozu one here, they're the same family, where they basically are closing or closing at the lows or highs. And you see this one closing sort of at a low or a high. This one here, the Marabozu, you don't often see these. I actually did see one yesterday in a stock that I was trading on the open, and you can see it just literally either closes right, there's no wick basically, closes right at the highs or at the lows of that candlestick. With this one, it closed right at the lows, being a red candlestick. This one here opens and closes down here. This one here opens and closes down here. Okay, so it's a red candlestick, Bozu family. When you get those types of candlesticks, when you get these Marabozu type candlesticks, shooting star and hammers, sentiment is extreme on those. All right, so let's go into the charts now, into live markets. All well and good talking about it in the presentation, but let's go and have a little look at some of these in a chart. Okay, the first one here is this standard line right here. Okay, you see this candlestick here is that standard line. This is this one right here on the left hand side. That standard line right there. It hasn't closed yet because this market is still open, but if it closes like this is a continuation. We should see more upside in this market. And one here, what does that look like there, guys? There's a downtrend, lower lows, lower highs, lower lows on price. What does that one there look like? Okay, that looks like, well, has the wick, is the wick long? It is, and then it opened, it's green, isn't it? So it closed higher than it opened. The body looks like a hammer. You can see continuation down, and then buyers come in. Buyers come in around round numbers most of the time, especially any market, stocks, FX. Look, this is 121 on the pound on cable. It comes down, buyers step in, close it above the open. It's a hammer. The way we used to trade that in the old days with trading the open in stocks would be a buy above the high of the hammer. Your stop would be at the low of the hammer. In this case scenario, that is a long way away. A long way away. That's a daily chart. So you're talking about 150 point stop. But that's not the point. The point is recognizing these candlesticks. You can see from there it goes and pushes to the upside. Okay, so hammers have to be at the bottom of trends, guys. That's the key. Okay, and I want to just stay with that because look at this. Let me just open it out for you. This looks like a hammer, doesn't it? Buyers came in here, pushed the price up, closed higher, small hammer, but it's at the top of a move. Okay, it's at the top of the trend. For me, that's not a reversal hammer. As I said, hammers at the bottom for reversals up. Buyers are stepping in. You can see here we come down here. There's not a major downtrend. We get this type of sort of doji type candlestick, but it doesn't break the high as the hammer. Okay, so hammers at the lows are important. And here's another one right here. Downtrend, yes, decent downsized move. Then hammer. Does that bounce off 123? Look, yep, off 123. In fact, who took control on that candlestick? Sellers. Sellers couldn't push it any lower. It was like a big battle going on here. The sellers won this battle here, guys, okay? But I didn't win the war. And what happens here is that the market did rally higher because the hammer was in play here. Green hammers at the lows are better than red hammers at the lows. Green hammers at the lows are better than red hammers at the lows. Here's a shooting star. Trend is up here on cable. You see right in here, shooting star. Okay, so sellers are in control. Buyers try to take it higher on a breakout above this recent high. It closed lower, closed with a red. Sellers took control on that day. Wick was quite long. Break below the low, gives you an entry. We sort of reversed for several weeks there. Standard line, once again, another standard line. Standard line. Bit of a buying golfing candlestick. Standard line, standard lines, standard lines. So just normal continuation in the up move. All right, normal continuation in the up move. So if you're long and you get this nice bullish standard line candlestick, that's good. Trying to find Bosel type candlesticks is really hard because they're quite a rare candlestick. This is the closest I've got here. It's virtually closed at the low with no wick. There's a little wick under there. There's another little wick here. That's close. Now, if I was short, or if you're short this market and you're running it down and it closes right at the lows, it's going to go again the next day. It's going to go again the next day. You get another one here closing right at the lows. Sellers are completely in control of that market. Same with an uptrend. If you get the price closing with no wick at the top and you're long that market, then it's going to continue the next day. Buyers are in complete control of that market. All right, so when you get closes high and lows, no wick, then continuations are likely to happen. And you can go and find spinning top type candlesticks quite a lot. Doji type spinning top, pretty similar candlestick patterns, but they're probably the most common, I think, candlestick out there when you're looking at something like a spinning top candlestick and a doji candlestick, which indicates indecision. Spinning top is indecision, but the body's in the middle. You've got one of those right in here. I think the most important thing is that you just ask yourself every time you're placing a trade or looking to see what type of candlestick you're dealing with, is to just think, what's the sentiment? Who's in control of that candlestick? Who's in control of it? And that will give you an idea then, guys. All right. Anyway, hope you like the video and hope you like the education. Please do not forget to subscribe to the channel. Give us a like as well. And I'll speak to you on the next update.